Another week has begun, and from the rise in prices of essentials, inflation, jobs and IPO listing, here is all that you need to know that has a direct impact on your pocket and your life here on Money Time at Money9. I am Ajay, and if you are looking to buy a home in the coming times, this first bulletin could put your dream of buying a home on the back burner. Now, as per a report by PropTiger.com, real estate properties in the country are expected to become costlier in times to come. On an average across the country, property prices have shot up by 5%. This is because steel and cement prices have been continuously rising, which has led to the increase in property prices. And to cap it off, home loans too have become costlier by 2% in the last 1 year, and because of this, RBI has been increasing the repo rate to combat inflation. However, demand too has also been robust for real estate. Delhi, Pune and Bengaluru have seen price hikes in property in the September quarter. Prices of property have remained the highest in cities like Mumbai, Hyderabad, Bengaluru and then Delhi NCR. Property prices have indeed gone up, but so is the number of jobs. So if you're looking for a new job or got laid off, it's time to smile and shine. September saw the highest number of formal jobs being created, and the number is more than 16 lakhs as per payroll data of EPFO. The sectors which saw the maximum number of job creation is banking, textile industry, general insurance industry, hotels and healthcare, with the youth bagging more than half of the jobs. Now, EPFO has also said that states like Maharashtra, Gujarat, Uttar Pradesh, Rajasthan, Andhra Pradesh and Odisha has seen a rapid pace in job creation. And speaking of pace, employees that have left jobs has also declined from August to September 2022. Well, looks like everything is on an increasing spree, and this time it's coming from the telecom industry. Bharti Airtel has just increased its minimum recharge by almost 60% to 155 rupees in states like Haryana and Odisha. Now, this is for the plan that comes for 28 days, but as far as the 200 MB data plan that was offered at 99 rupees is now being scrapped. Airtel has also started offering the 155 rupee plan, unlimited calling, 1 GB data and 300 SMSs. The new plan is under trial and will be likely rolled out across India based on the result. Also, please note that if you're having any plans below the 155 rupee mark, then you may have to switch your subscription pack, because Airtel will most likely pull the plugs on those as well. Up next, we are going to focus on recession. Now, the former Niti Aayog Vice Chairman Rajiv Kumar has said that the world will fall into recession very soon. But India, he said, will not fall into recession, and the country will grow by 6 to 7% in FY23. Mr. Kumar also added that retail inflation will remain in the range of 6 to 7% for some more time and will gradually fall after that, and has not mentioned the time frame as to when the inflation will come down. He also commented on states like Rajasthan and Chhattisgarh, Punjab, which has approved the old pension system, and has expressed his displeasure. He went on to say that this was nothing more than a political gimmick and a step backwards, as the new pension scheme has more choices for the Indian working class. Well, the former Niti Aayog Vice Chairman may be brimming with confidence as to India's growth rate, but that's not the case with Goldman Sachs. One of the big four, as they like to call it, has cut the GDP forecast to under 6% for the calendar year 2023. It also said that India's growth rate would be slower in the first half of 2023 and would gradually increase in the second half. It also added that RBI will further hike repo rates to 6.75%. This means that loans are set to get costlier. And the next news is on the union budget, and your personal income tax may come down. Yes, you heard me right. The industry body CII has made recommendations to the government to reduce personal income tax in the upcoming union budget 2023-24. CII has said that this, citing that demand can be revived in the economy as the tax reduction will put disposable income in the hands of the public. It also suggested measures removing certain goods and services from the higher GST slab of 28%, uniform rate of capital gains tax, increased pace of privatization, increased government capex, measures to increase manufacturing, investment in priority sector, export, digitization and reduction of fiscal deficit and non-priority expenditure. Moving on, we come to essentials, and if you're in Delhi NCR, then dairy is going to get dearer. Starting from Monday, that is today, price of Mother Dairy's full cream milk will increase by 1 rupee per litre. This means that what costed 63 rupees till yesterday will now cost 64 rupees from today. While token milk, which costed 48 rupees per litre till yesterday, will now cost 50 rupees per today. Now, so far, Mother Dairy has not increased price of 500 ml packet of full cream milk, but in the last 8 months alone, full cream milk has become costlier by 7 rupees per litre in Delhi NCR. The company said that it has increased the prices owing to shortage of raw milk. From milk, we move on to markets. FPIs have been net buyers in India's equity markets so far in the month of November. They have bought shares worth more than 30,000 crore rupees till November 18 and were net sellers in the preceding 2 months. But VK Vijay Kumar, Chief Investment Strategist at Geojit Financial Services, has given a warning that FPIs are unlikely to remain net buyers because of the high valuations of India's equity market. Adding to that, valuations too in markets like China, South Korea and Taiwan have become very attractive. FPIs turned net buyers in November because of stabilization in rupee's value and the resilience shown by the Indian economy, with most of the buying happening in sectors like IT, auto and telecom. And as far as the bond market is concerned, they have remained net sellers so far in the current month. FPI buying has gone up, but the number of demat accounts has come down. The new demat account opening for October 2022 has fallen by half on a year-on-year basis. The total demat accounts in the country stood at 10.4 crore by the end of October. For the past few months, the rate of opening of new demat accounts has continuously slowed down. Roop Bhutra, CEO of Anand Rathi Shares and Stockbrokers, said that the rate has slowed down because of market volatility seen in the current calendar year and underperformance of broader markets in comparison to benchmark indices. Nitin Agarwal, Senior Group Vice President at Motilal Oswal Financial Services, said demat account opening slowed down because of global uncertainties like rate hike increase, rising inflation, etc. However, he was optimistic on retail investors' participation as the market was still deep underpenetrated in the country. Two of the companies that recently garnered crores from respective IPOs got listed on the exchanges on Monday. Investors made bumper profits on investment in shares of Archean Chemical Industries Limited. The stock made its debut at nearly 11% on premium on the BSE. After that, the counter dipped a bit to close at 457 rupees a piece. The stock is still 11% higher than its IPO price. Another company made a strong debut on the D Street. Shares of Fusion Star Business Finance Limited closed 8% higher on debut. Its stock closed at 489 rupees a piece on BSE. Its current price is 3% higher than the issue price. And we wrap up today's Money Time with some news on market updates. Market benchmarks fell for the third consecutive day and ended nearly 1% lower amid weak trend in global equities. The 30-share BSE Sensex fell more than 500 points to close just below 61,150 points. The broader NSE Nifty closed below 18,200 points. From the Sensex pack, Reliance Industries, HDFC, Tata Consultancy Services, Tech Mahindra, Infosys, Bajaj Finance, Wipro and Tata Steel were the major laggards. International oil benchmark Brent crude fell almost 1% and was trading at $86.82 per barrel. Well, that's all for today on Money Time at Money9. Download the Money9 app and also subscribe to Money9 English's YouTube channel. And also do like and follow us on Facebook, Twitter and Instagram. This is me Ajay signing off. See you tomorrow at the same time.